Is it worth investing in stocks of Gabriel, an auto ancillary company? Gabriel India Limited, a leading manufacturer of shock absorbers, dampers, suspensors, and front shocks, posted a very strong set of numbers in Q3 FY21. The strong numbers in Q3 FY21 was on the back of a sharp recovery in demand, with new orders and exports offering significant opportunity for growth. Financial performance. The top line and operating profit witnessed a double-digit growth on a year-on-year basis. Net sales and EBITDA margin grew by 17.8% and 30 basis points respectively on a year-on-year basis, while employee cost and operating expenses as a percentage of sales came down 170 and 130 basis points. The growth was driven by the sharp recovery in the underlying demand for two-wheeler and commercial vehicle, market share gains and new product launches. But EBITDA margin remained flat primarily due to significant rise in raw material prices. Market share. Gabriel has a 25% market share in a two-wheeler segment, 65% in three-wheelers, 18% in passenger vehicles and 75% in commercial vehicles category. The company has more than 40% market share in the replacement category. Industry outlook and new orders. A shift in preference towards personal transport as people continue to be cautious about taking public vehicles is a key growth trigger for Gabriel, as it generates more than 89% of its revenues from these segments. Further, the replacement segment, that is 13% of the total revenue, is also registering growth, and the company is leveraging its brand strength and distribution network to capture the same. It had recently launched 11 product lines which have received a positive market response. The commercial vehicle sector is also expected to do well on the back of the announcement made in this year's budget. In the passenger vehicle segment, Gabriel has started supplying for Maruti's new models and is in advanced stages to bag orders for 3 new offerings of M&M, 2 models of Volkswagen, 1 of PSA, which is the second largest car manufacturer in Europe, and 1 of Tata Motors. In the two-wheeler segment, it has started supplying front forks to HMSI for its new Activa 6G model. It has also onboarded launch programs for TVS Motors and Bajaj Auto and is actively taking part in electric vehicles being launched by Okinawa, Ather, TVS, Hero Electric. And in the commercial vehicle space, the company has new programs with WABCO for air suspension, Mahindra Truck and Bus Division for ICV 16T, and with Force Motors. Exports. Gabriel sees significant opportunity in export markets as US and the European OEMs have started reducing their dependence on Chinese manufacturers for component supplies. With critical deal wins from VW Russia and DAF, a Dutch truck manufacturing company based in Eindhoven, the Netherlands, and a division of PACCAR, the company has established itself as a strong player in the global market. So, should you buy? Gabriel's stock is trading at 15.7 times FY22 projected earnings, which is very reasonable. The only risk factors that remain are the worldwide issues of slowdown in car sales and an increase in the cost of raw materials. We expect the demand trend to continue to remain healthy, and our advice for investors is to buy the company with a long-term perspective.